Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Ted Rechtshaffen. Ted is president of TriDelta Financial Partners. Today we're going to talk about kinds of financial advice. The kind that I think everybody's familiar with is the investment side of things, which is important. But tell me about the other kinds of advice. What are some of the other topics, subjects that your advisor should be dealing with for you?
Well, cash flow is very important for a lot of people. Taxes are things that a lot of people, investment people, never talk about. Debt management, are you paying too much, too little? Do you have the right insurance? Are you able to give money away to charity or to children for tax reasons? All of those things are part of the planning mix. Do you have a will? That, generally speaking, aren't discussed by most investment people.
So where does the investment side of things fit in? I mean, the investments are crucially important because that's sort of the way you build up the assets that will help you reach these goals. I mean, how much time do you spend like developing a person's investment mix versus their overarching financial plan?
Well, it's more the order of operations than the timing. I think long term you spend a lot of time on investments, but we find that the investment piece is usually second or third in the mix. So if we understand the bigger picture, the big thing is what investment risk do you need to take, and that drives a lot of the investment decisions.
Okay, so you decide how much you need and then you tune your investments to make you that kind of money.
Yes.
Now, talk to me about the ongoing maintenance of the financial plan. You know what, you've put the 15 hours in, you've made up somebody's plan. How often do you have to check back and make sure you're on track?
Well, it's two parts. One is has there been a major life change? Anything significant that changes, you want to go back to the plan and reassess, does it still make sense? If there hasn't been major changes, generally speaking, once a year you can do kind of a checkup and see, are these numbers making sense? How have we done versus the plan? Do we need to make any big changes?
At what point in time do you make a major change in a plan for a life cycle event like, say, retirement or starting a business or something like that? Like, how does it work?
Well, if it's a really good plan, you don't actually have to make a big change because you've actually planned for it. You know, for example, if someone says, I want to retire at 60, you probably should be focusing on a plan at least at 55 to be able to develop it and adjust it and make it so that it's a seamless transition.
Okay, great. Thanks, Ted.
You're welcome.